All right, this is April 10th, 2026. We are doing a post-week recap, post-day recap, as well as my analysis going to next week on gold. We're going to be talking about how I did make around 3,000 today across my accounts. And yeah, it wasn't terrible. I definitely could have made more money. But yeah, it is what it is. So let's get into it. Right. So number one, let's kind of show you guys on the volume profile where we opened up. And if we go over here, you guys know I always mark out that weekly profile, and I'm gonna delete these for now because these are kind of irrelevant now. Great, awesome. Now we're gonna go to the higher time frame as well to show you guys. But yeah, basically the week opened up over here. Okay. So we're gonna kind of do a whole real-time playthrough. So number one is looking at the higher time frame chart on the 4 hour. You guys know I always have my higher time frame trend lines marked out. So at this point in time, we kind of have a trend line going like this. If we zoom out a little bit more, you can kind of see we don't really have anything else. We have this trend line over here, like that, like this. Which is another one. You kind of make the average point like right over here, but mainly on the 4 hour daily, we have these two trend lines, right? And those are the only two trend lines we need to take care of and watch, right? But number one is that coming into this week on the 5th, if you guys remember from last week, we did have the Trump come out and I think he said, what did he say? He said I think did he mention the ceasefire? I think he did, or something, but um was it the ceasefire? I think it was, but it was essentially obviously news causing a huge bearish drop on gold. This did get corrected by this higher time frame trend line intraday. I actually caught this bottom move right around here off this trend line like this, and I had pretty tight stop, and I was able to get like a 1 to 4 on this before market closed. But going into Sunday, right, the issue was that Trump did say another thing over the weekend. I think there was more I think ceasefire talks or something of where Israel or Iran were just talking about, yeah, just I guess cooling off, and that caused our gap down, right? Now, the issue is that you don't like one thing I will say is that being able to day trade, you're not subject to this volatility, right? So that's why it's really nice because you're not really subject to the opening volatility. So you don't have to worry about like, oh, if there's a tweet or whatever, you get you get fucked on a gap open or gap down, right? But the biggest thing was I was looking for essentially longs past this low, even though we have this trend line. The reason I didn't like this low specifically was because this low was made from an algorithmic touch off VWAP from last week like this. So it was a very, very, very tick perfect tap off VWAP, which then caused all the institutions to then start buying gold, all the algos to start buying gold. But I didn't like how inefficient this is because if you look in the data, this rarely happens of where you have one tap like this and then just ends up rocking for the whole week. So I do want to see us reclaim back to this low, if I'm being completely honest, over here. Reclaim that. Oh, what the fuck? Actually, we'll do it on here. Reclaim this low over here at some point and then end up potentially going higher. The issue is that that was the only level I was looking for, essentially just to retrace off basically over here, this level of demand, essentially just to retrace off here in line with the fact this is kind of like just gonna be like a fake breakout of this trend line. But you can see this trend line was really holding strongly. But the biggest thing was like that was really, I didn't really see anything else after that. Now when we closed like this, when we took out this high, right, we took out this high like this, we reclaimed it, we made a new high. Well, this is now our protected high, so we essentially should not see a break of this high unless the market is going to go higher. Does that make sense? Because we already took out this high one time. It's very unlikely that we're going to come in, take out the high again, and then just dump. Okay, so this is our protected high right here. So when we opened up on market open, my whole idea was saying, okay, I'm very confident now that I still think that we're going to react off this level, because I just don't think that this was efficient enough. This low that was efficient enough was the real low, and we're gonna reclaim that, right? So all I did was I shorted at which one called, I shorted right at open. So the moment this wicked up, I was kind of dumb. I had a really tight stop on this, but I took one loss here, and then I shorted again on this wick up, right in this area of demand, or excuse me, supply. Stop loss was right above the high like this, like 3 cons, I'm pretty sure, like that. And then I was targeting all the way down here, minimum for like a 1 to 10. Now you can see I was in a fucking banger entry, like, you know, I was holding this, and we had some volatility come in, but like you can see it went up for like 4R basically, but I didn't take TP. And I should have moved to break even after we came in to retest this level again, and we made this expansionary move. Well, there's a 100% chance that we should have moved to break even at this point. The thing was I fell asleep, so I basically took a 2R loss on this, even though I was up damn near 4R on this, targeting, this area for TP, but it was just poorly managed, right? It was a really good bias though, from a really good understanding from a analysis perspective. So after we did that, I got stopped out, and that was it. I didn't see anything else. I wanted to wait and see how the daily close was, and see. And I hit my loss limit on the day, so I was like, "There's no point looking at this anymore," and we're just gonna wait and see what price does. Now you can see it does whatever. We already took 2 losses. We're managing the risk, whatever. Then price ends up starting to come up, right? Price ends up starting to come back up near the PM session, right? 1 o'clock, 2 o'clock, and then news comes out that excuse me, I think it was Trump was saying he's gonna like not ceasefire, but he was gonna strike Iran if there's nothing on Tuesday. I think he said Tuesday's the day, right? Or something like that. And I thought it was basically priced in, but it came out on here that Pakistan on this candle at 318, Pakistan gave a 2-week proposal saying that we're requesting President Trump to hold off on the bombardment of Iran because, it was a proposal, right? And then that caused, I guess, some volatility to come in, and then we close above this high right here, like this, okay? So what did I say? I said, this is our protected high, right? If we end up closing above this high, we're 100% going to draw towards our Asian high from Wednesday, because I have data on this that this shouldn't be the real high, so we should draw towards that. I was expecting though that we're gonna dump towards this level first, and then end up having the start of the move. Like we drop over here, you close the day somewhere here, and then I just buy at daily open, and then we rock it up. That'd have been like the most optimal analysis, but that didn't happen, right? And then what happened was the dumbest shit was that we just pumped up at open. Now, the issue is, the reason you can't play this is because when all this talk is happening, all this tweeting is happening, you don't know if the candle is just going to immediately just dump or pump like 1%. So if you remember what happened right here, right? When Trump was talking, we pumped up, like we literally dumped to 1%, 1.3% on this move. So you can't really have a tight stop like this, because you don't know if price is just going to, the price is just going to immediately just dump and just like fuck you. So for example, it could have just done this and just slipped me or stopped me. So I wasn't willing to take that risk. And then, I guess maybe on these closures you could have market order bought, but it was just way too risky with the volatility, and basically I missed it. Now, once we made the high, or we made the floor around this high over here, we kind of died down. I'm thinking, okay, right now since we close above these highs, well, we can expect retrace longs to go higher. So literally, I'm basically just playing the retest of demand, or essentially this area of demand over here, right? Because if we really were to refine it, it's going to be like this, right? This area of demand right here, and then one more area of demand right here, because this should be our levels to retest and go higher. Really simply put, it's so easy. It doesn't get easier than that, right? Yeah, and essentially at this time as well, I'm gonna actually pull up VWAP on this chart as well. So it's a bit easier to look at. This is our weekly VWAP, right? And you can see that obviously we're very overextended. We're kind of mean reverting now. And then also we want to pull up the VWAP for this session over here, right? So actually, I'm just for clarity purposes, I'm gonna delete this. Actually, no, we'll keep it like this. So I know it's a bit messy, but essentially we just have 2 VWAPs, our session VWAP and then our weekly VWAP right now for this session. Okay, so my whole understanding was like, okay, like if we look, we have our session VWAP band over here. Again, there's no trades in this area, really no trades, but our areas of demand and supply, right? We have one here, and one here. These are our max ones, and that's all I did. Essentially was I just put a limit order at this band right here. The moment we touched on this band off this weekly band over here, and then I had a very tight stop covering this a little bit over here, this low right over here, like this, and then I was targeting all the way back up to this high because we should be bullish now, right? And at least take out the high and then close above the high because of the data that was presented, the news data that was presented to us of the proposal, and then this volatility coming in. But what happened was this was just priced in almost instantaneously, right? This was just pricing this in way too fast. Again, the algos came in here, bought it up really quick, made all this money off this scalp, essentially the algorithmic scalping, algos, whatever. And you could see, I didn't have my VWAP up during the time, but you could see what happened was that you can see we're tapping the session VWAP. So what's happening is that algos are then dumping their positions off this VWAP, and then that's all that's happening. So either, obviously, like I said, this was really only 2 long entries that we potentially had. It was here, and then one more was basically at this level over here that I got into somehow, I think, or no, maybe, okay, no. Here's what I did. I got in here, but I had a tighter stop like this, or a bigger stop like this, and that was a trade. Yep. So it's targeting for a 1 to 6. Okay. But obviously, they are pricing it back out, and they wanted to hit back the low open, which is right around here, right? So that's what they basically did. And they priced it back to the low, and then they closed around the low here. So I'm thinking now, okay, because they did this, they already priced out this whole move. And I have another indicator, that's a secret indicator. You guys don't know about it. And I don't really tell it for public. I only show it to my mentorship students. But it started sloping down and essentially confirmed on these closures, on these higher time frame closures around here, especially on this closure right here, that we are going to be bearish, right? We are going to be bearish. So I was thinking, okay, there's no harm in playing retrace plays to potentially go lower. Either sell it open or play slight retrace plays to go lower. Okay, so we took 1 loss here and then 1 more loss right here, like this, very simply put. And I think I had a slightly bigger stop on this one, actually. So I was basically waiting for this to pump up, but you can see it didn't happen. So we took 2 losses on that. It is what it is. And yeah, so that's what happened. So now I'm thinking, okay, these imbalances are way too big, way too inefficient. If we look at our volume profile as well, actually, I'll mention the volume profile after this. Kind of do one by one, the technicals and volume profile. I kind of put them together in one. So I'm thinking now, okay, we can just sell it open, stop loss, covering this high at least, right? Because we shouldn't, again, this should be protected, right? We shouldn't really take out this high. We should just go lower now to target, our value area low of this weekly profile. Because at the time, this profile it didn't have this upper, all this it didn't have. Okay, so if you guys know how to trade volume profiles, and I'm going to make a video on this, but understanding the shapes of the volume profile, if it's a D shape, a P shape, B shape, as well as if it's kind of like an inconsistent shape, we'll give you an idea on how to play the volume profile. So remember, the value area high and the value area lows were 70% of the volume trades, and this is kind of the extremes of our volume of showing us where there's real imbalance and balance going on, right? POC is the balance of where buyers and sellers most agree upon that price. Value area low and value area high is where there's an imbalance of those orders from a supply-demand order perspective, right? So I'm thinking, okay, we're going to trade back down to this value area low because at the time, the profile was looking like a bearish profile, right? We had a very thin top, and we had most of the volume trading over here. So this is where fair value was. So I'm thinking, okay, we're going to trade back towards imbalance, which is going to be our value area low right here. So this was the trade that I took. Again, it was up around 1.6R, and it's just so fucking frustrating because the trend was like all my entries have been really fucking banger for scalps. Like if you've noticed, like I've gotten at least 2R on all of these trades that were fucking, initially in there, but I was targeting higher RR, so I didn't actually get the trade. And I tend to only target 3 RR usually, even if I'm going for that lower time frame or that lower RR. But I was just so strong in these trades. Like if I have strong conviction in the trade, I'm gonna hold it, right? But that's what happened. We got stopped out here for 1R, and then that was it. We took that trade, and then I didn't trade for the whole day. You can see there was consolidation going on all over here. But essentially, all this was at this point in time, I can't really show where the value area was. Yeah, it was. Excuse me, it was low here, but I wasn't trading the value area. I was essentially just trading a retrace into the area of demand, which is going to be here, the extreme area of demand. That's all. It's literally all I was doing. I had one area of demand over here, and then one more, supply, and one more area of supply over here. And that should have been the area of where we should be looking for shorts because I was so confident on shorts, but those obviously didn't play out. So I got in right here on this candle confirmation, right there, stop loss above the high. And again, I was targeting all the way back down here again because, again, I was so confident that we're going to have the sell volume kick in. And then that was going to happen, but it didn't. We had news come out as well, but this was like fucking unemployment. And so I was okay holding this. Even though I don't trade news, I was okay. With this release, it's okay because it wasn't like a major news release. And then, yeah, that's what happened. We took an L here, and then we took one more L here. So it's like a -3 R day, right? So super shitty because again, this is because I'm going for higher R. Now, I will say that discretionarily, I could have made 12R on this day if I had the opposing bias because again. The only thing was like if we invalidated all of these shorts, then we're 100% going to be going long, right? That was the biggest thing, and that's exactly where we're coming into Thursday now, which was I did actually make money on today. This was Friday, which was a great day. I made a lot of money today, which is the whole trade. So the whole trade here was essentially a VWAP sandwich. So you guys know I talked about the VWAP sandwich, and it was just a perfect region of VWAP between this band and this band. This wasn't the main band, but this is just one of the bands I use. So in general, when you see again that area, that VWAP sandwich of that volume, that's going to be your key level, and it plays out in real time, right? So what happened was that I had taken a a long off this area of volume, if this area of demand like this, to again target like this to targets this high for about like a 7-8 R because I was really confident in this. And lo and behold, I basically got in on the 1 minute confirmation right here. I had a pretty tight stop on this, and I got fucking stopped by 1 tick. Even though it didn't go the full direction, I could have at least got, I managed this for 1 R. I could have got at least 1 R on this trade, trailing it to this low over here. And I did run up like 3 R, right? But I was just super tilted at this point. I'm not gonna lie, because like my analysis has been just really good. I've just been getting fucked on the execution, low key. Actually, no, the analysis was good, but just it was still not like perfect. But then the next trade was obviously over here. And I got in basically bottom tick at this area. I just limit at an overall point. It was either a limit at the midpoint or a market order. Yeah, it was like right around here. And then I basically took it all the way to here for a 1 to 4. So I made this loss back, and then all these other losses back from here and here. All these losses back, and then one of these because it was a 1 to 4, right? 1 to 5. And the reason is because CPI was released. So you know I never trade CPI no matter what. So I basically closed at around 7 o'clock for here because I could see there was really no volume, and I highly doubt that we're going to pump up and take out the high in an hour and 30 minutes. So I was like, yeah, we're going to close around here, and then you can see CPI came out. And then the reason you don't want to trade CPI is because, again, you don't know if it just drops, 1,000 points, 2,000 points, and this is a very normal CPI move. So this could happen. Obviously, we want to hedge against that. We don't want that to happen. So we just close a trade, and then we let CPI play out, see what happens. I was actually sleeping during this time, so because I'm not trading it, and I just want to see where the daily close ends up. And then you can see we come in, we fail to break the high one more time, right? We're holding this high right here, holding this high again now, and then you can see that we end up shifting internal structure. Volume came in, bearish volume came in. Now, there's a very high probability now that we're going to be going down. Now, I'm going to tell you also why fundamentally. And I actually, after I analyzed the news data, I'm very confident on this. So this was our CPI release, right? I can't actually open up Metals Mine. Maybe you guys could do it for you, but I'll just say word to mouth, right? This is our range of our CPI candle. But you have to understand how fundamentals work, and this is why fundamentals are so important, because you guys know the only reason I really will say to trade gold is because you can analyze it fundamentally and create a very high probability analysis, macro-based analysis with all of our tools, especially fundamentally, right? So the biggest thing here was that understand how interest rates work in relation to gold. If there is context and there is reason that we need to be hiking rates, that is bearish for gold. If there is reason and context that we need to cut rates, that is bullish for gold. Okay, popular to like mainstream mass word to mouth rhetoric. What people say, they say, "Oh, gold is a hedge against inflation." That is not true. Okay, if there is a reason to hike rates, because remember, gold and certain assets are going to price in these phenomenon the moment there's a trend or the moment there's an indication of that trend or that data. Okay, now if you've noticed, we stopped hiking rates like essentially like 2024, late 2024, we were in a rate cutting cycle, and that's what caused all the bullishness on gold. We were cutting rates, but now what's happening is that we stopped cutting rates. We're holding rates, which is another big reason on Fed monetary policy of why we end up even having this big drop in the first place over here like this, because we're holding rates, and then we had some tensions easing, so it caused a huge 20% drop on gold. But the fact is that there is a risk for increasing inflation now. So the Fed is still holding rates. You can go and check FedWatch's tool on and this is a lot of sauce actually, which is why I'm not really, you guys obviously can't get the mentorship level sauce, but this is why I'm not covering it like right now. But the FedWatch will show you the probabilities of rate hikes, rate cuts, and rate holds. But the biggest thing here was the implication that the trend is switching from stagflation, and just not necessarily stagflation, but just constant, not really increase. Well, I guess you could say stagflation, not really increasing inflation, to increase inflation jumping. Okay, so now they're still holding rates, but in my opinion, this is bearish in my opinion. Why? Number one is we already have these geopolitical tensions easing down, and I really don't see much more tension continuing. Maybe, who knows? But based off what we're seeing word to mouth, the ceasefire is still in effect. The ceasefire is not until the 22nd. So that gives us time to price in this bearish movement, as well as the fact that there's now implications that we potentially might need to hike rates. Now, if for our next CPI, we do show some increasing inflation, that is going to be more bearish for gold. Now, you can see what happened, right? The data that came out was bullish, but it wasn't a crazy bullish move because the markets are going to price in bigger overall narrative and context, right? When they saw that data, it wasn't bullish enough to where it gave the implication for rate cuts. So that's why we had this consolidation, not a crazy CPI move, right? And a really dull delayed CPI move because there's nothing this release wasn't important, right? But look what happens. We can see that get confirmed with our technical price action, right? And you guys know about the fundamental opening and closing sauce, but the biggest thing is here just monitoring. We're not trading this range. We're just monitoring what's going on and looking at the overall internal structure on the lower time frame, right? Look what happens. We end up closing. We come up here, hit this level of VWAP. Then we end up dumping and closing below this range. So the fact is that we've invalidated and we've already reclaimed all this price data, all this CPI inflation data. So now it's pretty much invalid. But the context now of what we're going to do in the future is still there. So like I just said, there is potentially implication for us to be hiking rates now with this print specifically. Okay. With the fact that geopolitical tensions are easing and there is still a ceasefire agreement, I mean, will they hold it? I don't know. But essentially, this is all bearish right now. So I am thinking now very probabilistically that we can at least see our bearish move up until this value area low over here from our volume profile. And we're going to get into the volume analysis in a bit. But I do want to see now on Sunday open for us to just sell off at Sunday open. Sell off at Sunday open, or a very slight retrace wick up to then just sell off and dump, right? So you can see like selling off right over here or like somewhere over here just to retrace off this level of demand and just selling off. And why is this so... Why is it actually very high probability as well? Because what's going on, right? We hit VWAP, right? We hit VWAP and we start to sell off. So this is saying that, okay, this is our bias, our short bias is looking really good right now, okay, in real time. Now, this was the trade that I actually took. The trade that I took was off VWAP. It was off this VWAP line. I was literally waiting for a retest of VWAP. I literally put a limit order at VWAP. Stop loss a little bit above the high for like this around 4R. And because it was near the market close, this is at like 3 o'clock, I only went for like a 1-to-1 basically, like around here, 1-to-1, a quick scalp. But I was holding for realistically all the way down to this low for a 1-to-3, and you can see it ended up dumping. I could have held it technically. It ended up dumping all the way to my TP, but this is playing out perfectly, and that's how I made 3,000 today. Okay, so now our whole bias going in on gold is that we have a bearish bias now because look, also the EMAs are about to cross over, and when that happens, it'll be a crazy good move for shorts, a crazy good move. And then again, these lows are all newer lows, right? We could see that pump all the way down to our value area low. We make some balance again here. We retrace maybe a little bit more. We keep shorting all the way back until we get to this low over here. And depending on what happens, that might be the pricing in of the bearishness. And then going into May until for the next CPI data, we're going to see what potentially happens. You might make a floor somewhere around here, but that bearishness is going to potentially continue. Who knows? You might have some craziness. We might dump all the way, to these areas over here. Who knows, right? But I'm just saying this is why like intraday trading can be so useful, because once you catch that trend based off that analysis, you can get a really good RR move. And that's exactly what I'm doing. Now, my indicator, my secret indicator, it did hit that bearish point on Wednesday, and then one of the bearish levels actually I didn't want to take because it was near market close. It actually ended up technically holding that high. So we're holding these highs, holding. So therefore, we can have a very tight stop because we really shouldn't trade above these highs, right? It's very unlikely we're going to trade above these highs and then just reverse, right? Like that. But overall, that's what I'm thinking. So I'm hoping to get like a very tight stop on this, something really nice, and then just fucking letting it hammer, you know, to like an 18, 19R, and then really lock that in and request that, you know, good payout, that fat payout. But yeah, let's see here. Yeah, so far so good. Also our candles, you can see indecision, right? Indecisions, all these indecisions. This is a harami, right? Bearish, bullish, bearish. Next candle, we are expecting price to open up, have a very small wick, and then just dump like that. And then hopefully the narrative based off our ADR, it's like a 2% drop at minimum. So yeah, it's perfectly lines up with our original TP. Now, you're probably asking like, why do you want to hold your TP here? Now, that actually brings me back to our volume profile now, because I told you guys that the volume profile is a great tool, but it really only shows you you have to really understand how to use it though, right? Because understand that the volume profile changes as you have it anchored off a certain period. So in this case, right, at this point in time, before we had this breakout that happened at the most awkward time, our profile is like cut off like this. I don't know if I can draw. I don't think I can draw, but our profile is cut off from here. Just imagine none of this existed. So at that point in time for this range, our profile is basically like this and like this. Now, essentially the value area low was going to be in this little range. And you have to understand that like, you don't want to, when you're in a symmetric profile, like when you're in a symmetric range, right? Like if we look at the volume profile, like, oh fuck, where's my drawing tool? Right here. Okay. When you're in a symmetric range, like this, where, you know, you do this and then, you know, you make that, like this, when it's like symmetric, right? Like this is a balanced market, which means that you don't want to trade anywhere in the middle. Okay. In the middle is a no trade zone. Why? Because you'll get chopped up trying to catch the breakout. It's just unlucky that this breakout was catalyzed by a Trump tweet that happened. But in reality, you don't want to really trade this range, or excuse me, you don't want to try to trade a breakout of this range because you're going to get chopped up. Because think about all the people that are trying to go like, oh, it's going to break out like this. I'm going to take a retrace off this level and then go long, right? And then they just get stopped out and they're like, oh, now it's going to go short, right? So I'm expecting the breakout, and then they just take a short like this and then they get chopped up again. So understand that like this trade right here was not off the idea that we knew that we were in a range, because it hadn't already shown itself, right? We only knew that we were in a ranging profile, in a symmetric profile, once this daily closed, kind of like around here, right? Obviously we would hope for it to close around here, but it was really this price data that confirmed that this area was in a range. Now, of this area, of this region, our value area is over down here. Okay, so remember, we still have our higher time frame trend line, and we don't want to try to overshoot our TP to where we're trying to like thinking, oh, we're gonna have like a 6% drop or something crazy. We want to be realistic, right? So really, our only area of TP is gonna be somewhere around here, and I really like just this area, like 4663. Like if we zoom in a little bit over here, I would honestly say like this imbalance, this gap over here, mainly, but also this lines up with this area of demand. So that's why I want to take it to over down here, and that's why I think it's super high probability based off this. And then what we'll do is once we sell off, hopefully we hit this area, we'll have some type of reaction. Maybe we might consolidate, right? Maybe we might consolidate for a little bit more, but then that'll just give us more reasons to go to potentially have one more retrace like this to then play more shorts potentially. But we got to wait and see with new data, like what's going on, like how's the profile looking, like what's really going on during that point. But that's really kind of what I'm expecting on gold. So yeah, I'm gonna delete everything for now. I know that was a lot, but there's obviously a couple more confluences, and also these are new lows, new low here. All these are pretty inefficient, these imbalances. So yeah, but I'll open the floor for any questions for anybody who joined in, and yeah, we'll take it from there. Whew, wow, that was I was kind of fucking rambling, but it's important to know. So
That was good, bro.
great. Any other questions? Anyone else in here? We got J Trades in here. Great, awesome. Yeah, I mean, I'm still in drawdown low key, but it should be I mean, I'm not proud of this payout once it hits, but it should be a decent payout still. Not obviously like a max payout, but it should be like a 10, 15K payout maybe, which I'll take. It's just, you know, again, it's being able to read the market and adapt in real time is really, really difficult. Like I would have made money on this, obviously, if the bias was different, because I just didn't expect us to, you know, take out this, like not even take, but like tap the low like this, make this be the low. Because also I have other indicators, right? I have my my standard deviation indicator, my Q level, right? Like all of that other sauce that I'm just not showing you guys on here because I do gatekeep that for mentorship level people, but like it's in my analysis. I'm just obviously not saying it, but there's a couple other reasons. But yeah, you guys have the meat of it. And yeah, that's why I am bearish on gold. But mainly the fact is that I think the biggest player here though of why I'm so confident in the bearishness is really the fact that we still have our ceasefire till the 22nd until something changes this weekend. So again, Trump could say anything. He could just say, "Oh, we're bombing Iran on Sunday," and then we have that gap up like this, right? We don't really know, but I'm hoping that we at least have some wake up or something, because I would hate for the market to just gap down like this, and then that'd be fucking ass cheeks. But then we can still play the gap fill. We'll put the gap fill to retrace and go down, most likely. But what was I saying? Fuck. Oh yeah, the main thing here, the reason why I'm so confident right now is because of the fact that we are potentially going to be hiking rates, not necessarily hiking rates, but that inflation will be increasing, which will give us the context to hike rates, which will, again, if we're pricing it in now, institutions will price in that differential, that mispricing now, and then they'll cause that move to drop because they like to do it ahead of time. Right? Does that make sense? So we really just got presented with that new data right now. So I mean, that's a mispricing right there, right? Because then think about it, when price is low and then we've already given the reason to hike rates, they can potentially push it back up, right? And that's how pricing in really works. So I do want to see us make a floor, like again, like around here, somewhere around here. Our value becomes undervalued, and then I do want to see some confirmation on that structure to then go higher, to then take out maybe this high, these imbalances, maybe make a floor around here. Because again, I have said this multiple times, gold will not go below 3,000 an ounce, like guaranteed. So we're not going to go below 3,000 an ounce over here, and I think 4,000 is a pretty strong floor right here. We probably will retest 4,000 again at some point maybe, but then this is never going to get retested again in the history of the world, and until we die, or not until we die, but like forever, I think, because again, gold is a commodity, and it will always get value since the start of time, right? So we made this floor, we've already broken past it, and we're just going to keep my retest some area around here at max is what I'm saying, and then we'll consolidate for, who knows, the next decade, 5 years, and then we'll continue going higher to 6,000, 7,000, right? It's going to happen at some point. But yeah, so that's what I'm saying, like, if we dump, like, this is really our only area to really dump, take out this low that was made at some point, and then make that floor around here, and then end up going higher for the next 5-6 years, whatever. But only thing I don't like is I kind of have, because you guys from the WMA perspective, I don't like how these WMAs are crossing, but in my experience, that what's going to happen is we're going to push through these, and then remember, these are kind of lagging, right? So just because they're kind of sloping up like this doesn't necessarily mean that we're going to like fucking pump up like this. But obviously, if we close below this high like this strongly, if we close below this high strongly, well, our bias is going to be bullish, right? To go higher, but to take out this high. But I don't think that. What happens is, in my experience that I've seen, is as it's doing this, especially with our new fundamental data, what's going to happen is it starts to curl and change the inflection point as we make the new price data. Because what are WMAs, right? They're reflections of price data. So the first thing that has to print is the price data, right? So I just, again, use it for context and narrative, right? But you can see what happens is like, in my experience, price will start to dump or like really push through aggressively, and then the WMAs on this 4 hour at least will start to flatten out like this, and then it'll do something like this, and then it'll keep do something like this, like that, like a fake out basically. But that's what I'm saying. That's like the only gripe I have about this. But I'm very confident, based off the fundamentals, based off the volume analysis, that we can definitely get a good short going into next week, and we can potentially have a bearish week. Because also, I will say, if you look at the distribution of bearish candles as of recently, like, you don't remember, like, PO3 or top and bottom wicks, like, you guys know what PO3 is or whatever. Like, I call it candlestick dynamics, but how a candle works, right? Like, we have an open, right? Open, low, high, close, right? For a candle. And then obviously this is going to be mapped out as the candle opens here, makes the bottom wick, and then, it expands here, and then it makes the high here, and then, or in this case it'll be like this, and then the high of the candle was here. So this low corresponds to this low, this high corresponds to this high, this opening price corresponds to this price, and the closing price corresponds to here, right? Basically, that's anatomy of a candle, right? But notice that on the weekly, we're not gonna really have like an equidistant, characteristic top and bottom wick, right? Like notice that we have a lot of weeks of where we just open up and dump, right? If this is a bearish week, we open up, dump, right? This bearish week, very small top wick, dump, right? This, like, you get my point. Right, this week right here, very small top wick and then dump. So that's why, like, I don't like to really look at stuff like, oh, like this high needs to get swept, this liquidity sweep this liquidity sweep that, because the market's always a consistently like a continually moving entity, like an evolving market. It continually evolves. So again, like, you can just short it open and make money. Like, think about all the people that just bought it open right here. Think about all the people that bought it open right here, like 2-tick stop. Like, they printed, right, 20R on this, So that's what I'm saying. Like, opens can absolutely be your absolutely be like the point of like a drop or pump, right? So that's why I do want to see shorts coming into short at open 1 micro coming into Monday. But yeah, we will see. And if we miss it, obviously we can, we'll have another break of structure, right? Like this would be kind of like the real one, you could say, and then we'll play the shorts to go even lower. But I was obviously just playing the internal structure because I was so confident on these. So yeah. Short at 1 micro. All right, great. Any questions?
I'm wondering if you use your fib tool for context, like ever.
Yeah, absolutely, bro. So I do use the fib tool. Obviously, like, on the level of, if you want to get the mini course, right, it's in the mini course how I set it up. But absolutely. So if we have no mentorship students in here, but yeah, this is my fib tool, and I use it very, very, very vehemently. So when you're analyzing swing highs and swing lows, you're doing your multi-fib analysis. You're just, again, you have a swing structure here. You're taking from your swing high to your swing low, right? And you're doing a multi-fib analysis to figure out your areas of premium and discount, right? And then yeah, I do use that. But obviously that's like, that's honestly, bro, you got to go through all my YouTube videos and kind of piece it together. There's too much sauce on that, on how to use it perfectly. But yeah, I do use the fib tool. Absolutely.
Yeah, thank you.
Yep. Great. Any other questions? J Trey's taking all the sauce in here, man. Okay, great. I'm gonna go upload this on YouTube on Sunday, I think. Yeah, so for everybody watching this is gonna be kind of like a Sunday upload, I think. And oh yeah, also I will say, if I pull up the composite, I do like to, you guys remember, I do like to take a composite as well. So if I, and the way to do that is you come over here, you go to indicators, and then you come over here and go to your volume profile over here. And then all you literally do is you change it from display mode, or not display mode, it's gonna be profile period, to from week, sessions, bars, whatever, to composite. And then I do a 3-week composite usually, to kind of aggregate all these profiles into one, and it gives you an idea into kind of what's happening. So you can see over here, right? Understand that, like, value areas and they're just expressions of they're basically POCs, if you guys didn't know. So you can see over here we have a very strong area of that spike of volume right in this middle. So based off our whole context, like, this whole area of demand is a very strong area to take TP right in this area. This is also technically a low volume node in respect to this whole period, if you were to kind of conglomerate everything. So we have our low volume node in respect to our composite, our overall VAL technically in relation to this week's profile. And yeah, this is why this is just a very strong area of demand, of where we're gonna see potential auctioning occurring, and then reversals, right? Because we don't want to hold her back too much of where we think it's gonna drop like 6% in a day or whatever, and then we just get, we get cooked because it reacts off somewhere here and then just has a crazy retrace, right? You got to be realistic with your trades in your RR. You can see the next area, if I were to kind of zoom this in, the next area is going to be I would say over here, right? And that doesn't line up obviously with our VWAP tap low being a fake VWAP tap low, and then us hitting this area and then potentially having another reaction. And then this area of low volume, the only reason why this is created was because of this move right here. So I don't really think this area is actually is a real low volume node or actually significant. It's just only because of this fundamental catalyst tweak coming in at this point. So if we break and invalidate and we're super bearish, it's gonna drop all the way past here. This whole area is just gonna get dropped past upon. But in relation to our fib tool, right? Like, if we were to take out our fib tool as well, I will pull this up based off our higher time frame structure. Remember, this is not actually a swing leg, but based off our understanding of and my experience actually of on the higher time frame where you make floors, we will potentially make a floor somewhere around here, right? So I do want us to see us make a floor around here. A lot of the times it'll retrace back into here and then end up going higher again. So overall though, like I said, this is just a very looking very good for shorts right now. Yeah, I could be completely wrong, but that's my analysis for you guys. And yeah, that's just really much it. Hope you guys enjoyed. I'm gonna ask one more time any more questions as a final final call for questions.
Nope, I think you covered pretty much everything.
Great. Awesome, guys. Well, have a good weekend. I'm going to de-stress, get back in the gym, sleep, really just get my bearings straight for next week. Just make sure the execution is good. And yeah, absolutely. And yeah, hope you guys have a good weekend. All right. I will see y'all later. Take care.